I think the last note I want to close, just what you were saying there reminded me of is with the buy now, pay later thing. I think one of the reasons too why it's just not great is because debt isn't bad as long as it's productive, right? Like if
Yeah.
you take on debt for
Yeah.
honestly for a house or for a company or for whatever. I mean, that's if you can produce more cash flows to service that debt, then that's a good thing, right? You go all the way back to Alexander Hamilton. He believed in, some amount of debt. There's just a line somewhere. And honestly, a lot of the assets that the stuff, I'm not going to call it assets. It's stuff that people are buying. You're not going to get a return on, I can't think of any consumer, whatever,
Buying
like your
appreciated
AirPods.
assets.
You're not going to get cash flows from the AirPods that you're financing.
No, again,
basically.
buying appreciating assets with low cost debt is what rich people do.
Mm-hmm.
Think about it. That's what rich people do. They own multiple homes. They own appreciating assets like art and commodities, and they finance it with really cheap debt. Yeah. That is productive. That is productive. Buying wasting assets with high rate debt, consumer debt, is a recipe for the poorhouse.
All right, I want to move on to this last story here because I want to get your take, something more in crypto land, but also just about down rounds in general. So story kind of broke this week, right? That BlockFi is raising a down round at $1 billion valuation. That's down from the last valuation that they had, which was $3 billion in March of 2021. Yep. 3.8.
3.8.
Now, I mean, we could either talk specific. I mean, you and I have talked about BlockFi in the show. I'm going to say my personal opinion here. I'm a big fan of BlockFi, so we could talk about them. We could talk about.
No, we can talk about it. Look, we're the second largest owner, and I love this company. I think that this is a steal at this valuation at 2 times revenues, compared to a lot of public companies at still 15, 20 times revenues. Paying 2 times revenues is a really good deal. But look, the average down round, I believe, is coming 80%. 80. And there was a tweet this morning. I don't know if I retweeted or not, but it was a analysis of, GoPuff and a bunch of other big companies that, all the big glitterati venture funds did 6 months ago. They're all going to be down 50, 60, 80%. And it's real. And look, Keith Raboy tweeted about this 6-8 months ago. And whether you love him or hate him, this was cool in that he said, yes, we've all lost our minds. As an industry, we're all overpaying, but you go first. You cut your valuation first and get excluded from the deal. And the rest of us will do the deal, and then I'll follow you. Nobody wants to be first. And look, I said, am I happy that the valuation is down 75% from the last round or 74% from the last round? No. Am I excited for the future of this business that I think is going to be one of the dominant players in the space? Absolutely. Am I going to participate? Absolutely. But yeah, it's more are coming, and the good news, and nobody likes to hear this either, and I'm going to say this on stage tomorrow, a whole bunch aren't going to survive, and that's not a bad thing. What we need is to get the bad ideas away and not allow them to drain human capital and physical capital in, and we need the displacement to happen and for people to be displaced, right? Gemini's laying off 10%, and other companies are laying off 10%. And that's a good thing. And I go, wait, no, people losing jobs is not good. And I don't mean it in a mean way. And I'm, touch wood, I still have a job. It's not about that. It's that downsizing is necessary. And those displaced people, in many cases, go on to do amazing things. Some of the best investments I have ever made in my career happened in the depths of bear markets, backing people who were displaced and had to do something unique, innovative, creative. And so this is the time to build. And it's necessary. Winter is necessary, and it creates spring and summer.
Yeah, I would tend to agree with you there. I've got a specific question for you on, because you hear these awful things about down rounds, right? Like avoid at all costs. It's really bad.
Yeah.
Why is it so bad? And if you could talk specifically for the employees as well, just because equity is a very confusing thing, especially in startup land, and is often not very transparent. And as an employee, sometimes depending on how your equity is structured, you're very junior on the cap table, right? So your equity is kind of the first to get wiped out.
Absolutely. Look, down rounds are bad for lots of different reasons. I mean, one, just the psychological effect.
The psychological impact.
You thought you had this great wealth, and now you don't. Now, Sam Walton used to say this all the time. It was paper yesterday. It's paper today. It'll be paper tomorrow. So people who spend it like it's real, that's a mistake. It's paper. And until you convert it to real money or real value, it's not real. And one of the things about venture, I like to say this even to my partners, that venture is not about what you got; it's about what you got out. So all of us felt really smart 6 months ago. Oh, look at how these high valuations, but they weren't. I didn't get the cash back, and we did take some chips off the table, and we actually sent back all of the money from our first fund to our investors within 3 years. That almost never happens. And I feel really good about that. And so now we have all profits to harvest in the future. But we didn't sell everything. And our valuation is going to go down. And that's okay. But for employees, it's bad. One, psychologically. Two, the way stock compensation works is you got all these options that are struck at probably higher prices, and now suddenly they're out of the money and they don't have as much value, and you thought you were getting paid a lot, and now I'm not being paid for my value. So that's a problem. And so then it also forces some people then to do some secondary transactions to fund lifestyle, buy a house or whatever. And so that then pushes the price down because people are like, "Whoa, you need liquidity? I'll give you liquidity, but at a price." And then the last piece of it is preferred stock. Venture capital firms come in layers of preferred, like the old Jell-O molds, right? It was clear on the bottom and then got cloudier with the different things, and it made the layers, or like a layer cake. And the last money in has what's called a liquidity preference, meaning in the event of a really bad outcome, like a liquidation, if something really bad happens, those people get paid, and the people at the bottom, the common shareholders, management and employees, get bupkis. I mean, think about this: $500 million company, suddenly a down round to 100 million. Okay, the VCs have 100 million in with a liquidity preference. It gets sold for 100 million. Some person comes in and picks it up on the cheap. The VCs get 100 million, and everybody else gets nothing. It's like, whoa. And so, yes, you want to avoid down rounds, but the reality is market valuation matters. And when the largest public comp, Coinbase, went from 10, 11 times revenues to 3, guess what? Every other valuation is going to go down.
Yep. I think that's very well said. And I think that, for those of you who haven't worked in a startup, the psychological impact is I can very clearly understand why that would be so disheartening. And, you can say that there's a great quote from Sam Walton: paper tomorrow, paper today, whatever.
Paper yesterday, paper today, paper tomorrow.
Yeah,
it's just
right.
paper.
But paper. people just won't live like that. People continuously, that's what makes it very difficult to compensate with equity, actually, in general. I think it's just a challenge of human psychology.
It's a super big challenge. And look, it's even more challenging because we went 13 years without cycles. So we didn't have to deal with this. It was just number go up. Not crypto number, but just economic growth, valuations, everything went up because they held interest rates down. And back to the Fed, it's the root of all evil. And, rest in peace, Rudy Havenstein. He was kicked off Twitter and, God rest his soul. I mean, ridiculous. But the guy, ETF and the Fed, look, the Fed's been causing problems for 109 years. and it ain't going to stop. And we are now in a place where the cycles are returning, and they might return with a vengeance. And, kind of like Die Hard with a vengeance, right? And usually sequels are bad. That one was not bad, but not as good as Maverick, Top Gun. Awesome sequel. Amazing.
I can't wait to see that.
Oh my God. Oh, Michael, I'm ready to go again. I was ready to watch it the second time on the day of the show, but it's so good, so well written, so well acted. Tom Cruise is, I don't care for his life and weird stuff, but the guy as an actor, amazing.
Amazing. Okay. Maybe it's a hot take. Tom Cruise is like one of the last real movie stars. That guy is a freaking movie star.
Star.
First of all,
star. Awesome.
First of all, he's aging in reverse. Whatever weird voodoo he's got going on with Scientology.
Yep.
I don't know, man. You can knock it. Something's working for that guy.
It's working, baby. It is working. Well, most of it is what you put in your mouth or not put in your mouth, and working out, right?
Yeah.
And that's the big part. But there may be something else. But it's working, and I don't know, the joy of that movie. There were periods in the movie of just pure joy. Like, he wasn't acting. He was just living. And it was awesome. And the scene with him and Val Kilmer almost bring a tear to my eye right now. It was just so good. And so it's amazing when an actor is no longer acting. Like, that he is that person. Mm-hmm. So, I don't know. It's just, but I agree with you. Humphrey Bogart, there aren't many that you would say,
He carries a franchise, man. He's so dedicated to the craft. Yeah, that's what I mean. He's like blockbuster. He headlines it. He's in the fighter craft flying, like on the Mission Impossibles. He's hanging out of the plane. How could you not respect that guy? Okay, and here's the other thing. Everyone thought he was a weirdo because he like hopped up on the couch or wwhatever during that Oprah interview. Yeah. Think about if he did that today. That wouldn't even be the top story of today. He just went a little nuts 15 years too early. You were ahead of your time, Tom Cruise.
That's right. As usual, ahead of your time.
Would be like, that doesn't even matter. Doesn't even make it'd be like, wouldn't even be the top story of a 24-hour news cycle today. So I definitely want to see Maverick. I just haven't had the chance to do it yet. But
all right, do it.
All right. That's all the time we've got today, folks. We got to wrap. Mark, as always, best hour of my week. I will see you same time next week, my friend.
All right.
Cheers.
Have a good one. Thanks, y'all.
You too.